Hey guys, Tony Denaro here. Welcome back to the channel and happy Father's Day to all of you dads out there. I want to take a brief minute to talk about this news from June 17th regarding Redbox and the warrant exercise deal and what that might mean to this play. Let's get right into the details. I want to start off by saying I have no current position in Redbox. I'm not long, I'm not short, I have no options in the play. I have made money on it during the run-up in the past month, and congratulations to all of you who have traded this wisely and been able to profit in this massive run-up in Redbox. Just a quick administrative update, and if you're already following Redbox, you probably already know this, but there was an adjustment made to the free float. Ortex is now showing free float at 3.94 million shares, a correction made to the data, and that did have an impact to the short interest. Let's look over on that tab. Okay, so with that update in the free float, the current short interest percent is now showing at 111%. Current estimated short interest, 4.39 million shares. And the cost to borrow a staggering 905%. My main cautionary concerns around this play is that the total number of shares shorted is a very small quantity. 4 million shares is something that is easily covered, and that remains my overriding concern about the potential of this play to squeeze to much higher numbers than it is at right now. Now let's talk about some of the shenanigans that are currently going on with Redbox, things that I warned about 3 or 4 weeks ago when I started covering it on Twitter and on YouTube. First of all, the options, as you know, have been turned off. You cannot buy new options on Redbox. If you have existing positions open on Redbox and options, those are marked now as sell to close only. And I did hear from some of my subscribers last week on Friday that they were unable to exercise their options. They were told that they could only sell to close. So if you saw that Friday close and the massive amount of options that were in the money and you're expecting those to be covered next week, well, they should have already been hedged for last week, but I think the market makers, they're not worried about it anymore because nobody can exercise those options. Why would they do that? Well, I have a couple of theories about the why. Clearly, the market makers sold more call options than there were shares available to cover them if they needed to be exercised or hedged. And they realized they were getting in a precarious position where a gamma squeeze was going to happen. A logical reason why options might be turned off is if a merger date with Chicken Soup for the Soul is about to be announced next week. I was expecting that maybe they were going to announce it last week and it didn't happen. But a more devious explanation is that maybe one of the options market makers was at serious financial risk of exposure from selling too many calls. And the OCC, seeing that one of the market makers was in a precarious financial position and had no ability to hedge all of those call options, use some of the rules that they have in place to stop these options from being traded or exercised. Now, if that second reason ends up being the reason, if there's no merger date announced next week, if they shut off options because a market maker was overextended and getting in trouble and they're protecting them and that makes you angry, you have every right to be angry. And we will be following this very closely to see what transpires in the next week and what further communications, if any, come from the OCC, the Options Clearing Corporation. Let's close out this video by talking about this news from June 17th, the warrant exercise deal. This is a deal for 1 million shares with an exercise price of $11.50. And if you go all the way back to the SPAC merger deal back in October of 2021, you can see those warrants were right there with an exercise price on them of $11.50. What this means in a nutshell is there's going to be dilution next week of 1 million additional shares into the Redbox free float. Now that could drive the price down, or retail could soak them right up and it could be a non-issue. What happens? I guess we're going to have to wait and find out. I want to bring this to your attention because if you're in this play, this is critical information to know going into next week. In this deal, Seaport, which was the parent SPAC company, will exercise 1 million warrants at $11.50 per share. That means Redbox would receive $11.5 million in cash, but wouldn't receive any proceeds from the underlying sale of assets. What does that mean exactly? Well, Seaport's going to pay $11.50 times 1 million to Redbox, and then they're going to sell those shares into the market for whatever they can get. And they're hoping they can get more than $11.50. And based on the trading from the past week or so on Redbox, it's quite likely that they will. They're counting on you, retail, to buy up these shares and bid up the price and make them rich. And this is one of the overriding concerns that I had with this whole Redbox play, is that retail was somehow being used to drive up the price. And granted, a lot of you have made money on this deal, and great for all of us that have made money on Redbox. But we also know that a deal is in place to merge this company with Chicken Soup from the Soul, valuing Redbox at about 50 cents per share. And Seaport was probably looking at this treasure, this money bags they had of these warrants that they couldn't exercise because Redbox was so cheap at $2 a share. How could they ever get it to $11.50 and be able to get out from under these things? Well, I don't know. How about if we run up the short interest and make it look like a short squeeze player, or maybe get the word out to a couple of influencers that this is a potential short squeeze play, even though it's only a float of 1.5 million, 2 million shares. Let's get retail to run up the price for us over $11.50, and then we'll sell into their buying frenzy and pocket a boatload of money. Great plan, Seaport. You have succeeded. Yes, even as they call out in this article, the warrants were underwater immediately after the SPAC deal. So a stellar meme-driven run in Redbox has provided the opportunity for warrant holders to cash out. So guys, with this video, I'm not making any predictions on what is going to happen next week. I'm not bullish or bearish on Redbox. I will absolutely play it into momentum if the opportunity presents itself next week. What I do want to do is share the information, get some discussion going, make sure that you are fully informed so that if you are trading this thing into next week, that you have all of the relevant information at your disposal so you can make the right decisions. Drop me a comment down below and let me know your thoughts, your questions, your opinions, and let's have some discussion about Redbox. I am Tony Denaro. I want to thank you for watching. Don't forget to buy and hold that subscribe button, and I will see you on the next video.